Our next guest says there is a larger story than just cloud computing at play, a consolidation trend centered on data warehousing. Joining us now is Jayson Noland. He's senior research analyst with Baird Co. According to data compiled by Bloomberg, his recommendations on Netezza have produced the highest rate of return of any analyst over the past year. So, Jayson, thanks a lot for joining us. Now, first of all, before we get into sort of the bigger picture of cloud computing or data warehousing, do you think that we are going to see a bidding war for Netezza? I mean, how attractive is it to some of these bigger players?
Well, HP, Dell, NEC has an OEM deal with them, and others could be interested. We just don't know what's taken place behind the scenes with the bankers, but there's a chance, Netezza said, don't shop the company to a direct competitor like Oracle. So we could see another bidder. EMC came in after Data Domain when they didn't get to look before, and we know what happened with HP, Dell, and 3PAR. So there could be another bidder here too.
So break it down for us a little bit here. I mean, why is Netezza so attractive? We've seen a lot of companies, sort of anything even vaguely associated with cloud computing, all of a sudden becoming hot. What is it about Netezza in particular, though, that makes it attractive?
Well, specifically, Netezza makes an appliance that allows companies to derive value or actionable knowledge from massive amounts of data. So think about an NYSE, a Walmart.com, a Google. They generate lots and lots of data, and they would love to try to identify trends or do predictive analysis of that data. Netezza has a fairly sophisticated solution that allows a company to do just that.
So what's going to happen going forward? Excuse me. Here, Netezza, the latest. We had 3PAR, of course. Are we going to continue to see this trend? I mean, what are the HPs and the EMCs of the world going to be looking for in acquisition targets?
That's right. There's certainly consolidation taking place in the enterprise data center. We have HP and Cisco, Oracle, IBM, and others looking at the ability to offer end-to-end solutions to enterprise buyers. They have lots of cash, they free cash flow very well, and they have gaps in their portfolio. There's lots of innovative technologies out there, so we do expect to see a continuation of this M&A theme that's started off here.
Any other likely targets that are floating around?
Well, I feel like the stocks that we cover, everybody is a potential target, so it's hard to name just a few, but anybody in the network security market is of interest. A Fortinet or Palo Alto Networks, the wireless LAN market, Maru and Aruba are of interest. And then in the adjacent networking markets, people talk about that all the time. A Riverbed and an F5 would slot in nicely to some of these larger companies' portfolios.
And Jayson, just very quickly here, among the larger companies, the acquirers, as it were, that you track, is there any one of them that sort of has the edge at this point?
You know, HP's got the scale. They represent more than 10% of some of the key markets here. But it's pretty early days, and it's hard to rule out an Oracle or a Cisco or even an IBM given their services presence. So I wouldn't say one has the obvious edge, but those four seem to be the leading candidates right now.
All right, Jayson Noland of Robert W. Baird, thanks a lot for joining us to talk about this latest cloud computing, data warehousing, end-to-end enterprise solutions M&A that's been going on today. Appreciate it.
You're welcome. You're welcome.